let's talk about interest rate hikes. We know the Fed plans to hike interest rates in May. Now, what does an interest rate hike mean? I'm no economist, but we can break this down. You see, interest rates are generally hiked to contract an economy, right? So increased interest rates means increased borrowing cost for consumers and businesses. The opposite of that will be stimulus, if you will, dropping interest rate to provide relief to the economy. Now, this causes a shift in consumer behavior, right? But how does this affect Bitcoin, right? We've seen in many situations where people make correlations between interest rate hikes or the S&P and Bitcoin. Today, we're going to be taking a look at some data to see if there are any correlations and how interest rate hikes may affect Bitcoin. Double up.
Champion.
Yes, sir. You see, we're in a very interesting time, right? We know that Jerome Powell came out and he said, look, we're going to be aggressively pushing up these interest rates, right? At a time when the economy is also, it's equally weak, right? So what we want to do in this video is to just kind of take things back, because one thing that we know for sure and that we talk about on the channel all the time is that history shows us the future.
True. Yep. By the way, we're not financial advice, but we're doing this just to get the word out there. And
right.
Maybe you can comment on the video and let us know what you think.
Hey, absolutely. Let us know what you think might be happening here. Now, let's jump right into this activity here, right?
Yes, sir.
So, we know that Bitcoin is where we would like to start. First of all, Bitcoin, if we just look at a chart of Bitcoin from the beginning of time to where it is right now, right? We can see that Bitcoin was flat. Of course, these were the initial days, the starting days when there was very little faith in Bitcoin and things like that. But we can see that over, since 2017, essentially, to right now, Bitcoin, you could say overall, has been steadily going up. What do you think of that one?
By the way, when you said 2017, that kind of reminded me of the stack cost that we have coming up. 2017 was when we started seeing later 2017, started having more major adoption of Bitcoin. So yeah, you guys might want to check that out in the coming future.
There was definitely some major adoption going on there. Now,
yes, sir.
Of course, in this situation, really the basics here and what we want to look at is a range of data points, right? And how these assets behave over certain periods of time, right? And then we'll see how that compares to Bitcoin. And can we really say that there is a correlation between Bitcoin and any of these other assets? Because we've heard the correlation to gold, right? I mean, Peter Schiff has kind of flip-flopped on that as well. And of course, there are people who say it's treated like the tech sector. So we've seen points where it moves down as the stock market moves. However, I think that there are other aspects about Bitcoin that maybe we're not factoring into place right now. And I have questions about that. Say if a bunch of people outside of the US economy take an action on Bitcoin, right? What would they correlate it to then?
Yeah. And I think it's actually a common question right now in public is how is this interest rate hikes coming up in May going to impact the market? And for us specifically, how is that going to impact Bitcoin and the cryptocurrency space?
Absolutely. So we're looking at we just came from looking at the Bitcoin chart. Now, what we're looking at here is a US 10-year Treasury note, right? The general idea here is to just see a trend, right? And so as we look at this, we can see that the 10-year Treasury note that has been on a downward trend since 1982, right? Yeah. So if someone was holding bonds over whatever period of time, it does not seem like this is necessarily a profitable or a strong return on your investment.
Yeah. And again, it depends on when you get it over time. But people that are buying the I-10 or whatever bonds it is now.
Oh, the I-Series bonds? Bro, I-Series bonds is designed to match inflation. So it's I don't want to roast anyone holding an I-Series bond, but I won't buy it. I think that's let's move on. I think that's a bad but now, so what is this? What are we looking at here now?
Yeah, so this is basically the history of Fed rates, but
Right.
particularly when the Fed rates have gone down. So those are those red dots that you have there. Because right now the Fed rates are going up, but they do go down as well. So what we're trying to do is just look at multiple data points, multiple variables to kind of
Right.
figure out what is going to happen or what could happen, right? So what you can see here right now is that there was that credit market turmoil that happened in 2008. We all know the
Correct.
financial crisis. Everybody and their mama knows about that, right? And the stock market dropped. So interest rates were dropped during those times as well. As you can see, it dropped from almost 6% down to 4% and down to 2%. And then, as you know, central banks did their basic thing, and then they brought it down even further by 50 basic points. And
Of course.
then, in the process of bringing it back up, COVID happened. And boom, we had to drop it down all the way back to almost 0.25, which is basically 0%.
Pretty much 0% at this point. Well, here's the thing. Before we move on to this next slide here, there's something I want to clarify. So pretty much when there is this periods of times when the interest rate is being increased, right?
Right.
Like say for example, like back in 2015, it was. It seems that interest rates are being hiked at a point in time when the economy was fairly stable, right?
Correct.
It seemed to be okay. Let's not say stable because American is economy and stable in the same word. It's not something you can exactly use. But now the difference is we're in an economy where we have inflation and a weak economy, really, but we're hiking rates, right? And so this is the key point that I think we're all wondering about. What happens in this situation? Because we can say that we're experiencing things that it does not matter if you're an expert on TV. It does not matter if you've been an economist with the highest, how would you say, decorations or awards? Isn't that what they call it these days? Right?
Economists,
Yes.
award-winning economists.
I don't think any economist has lived through COVID before. So I'm really doubting that these people know what is going to happen next.
I mean, those that actually lived through it are not alive right now. The first one that we had, the big flu.
Oh, yes, that one. But, I mean, did they have Bitcoin back then? They did not have that. So,
No.
Anyway, what are we looking at here?
So what we're looking at here now is we have interest rate hikes, right?
Right.
This is what's going on now. So let's look at what has happened over time to kind of see if we can use those data points to come up with an assumption or a theory or a thesis of what's going to happen in May when we go those major 50 basis point upward, which it's going to be major. So in 2015, this time we had Janet Yellen, was the Fed chairman at the time. And December of that year, she increased it by 50 basis points. So we're going to have a 50 basis point increase next week. But then
Right.
December 17 of 2015, there was a 50 basis point increase. And at the time, they were using it to stabilize growth. In this case, growth is kind of suffering. And we're doing the same thing now. So what is going to happen, right? We're going to show you some charts about what happened during those times lately. Shortly. Then we had Jerome Powell. Did something similar in 2018, but in this case, he started reducing the interest rates. So as of December 20 of 2018, he started to reduce the interest rates to say, hey, okay, let's figure out what's going on with the economy. We're trying to balance the economy, and they were reducing interest rates to help the country grow.
Absolutely.
Which is quite interesting, right? So interest rates are being used to boost or slow down the economy. We don't know really what the Feds are doing at this point because it just literally, it does not matter what's going on with the economy. They either pumps it up or dump it down. And then before you know it, in the process of reducing the interest rate to help the economy grow because GDP was slowing down, boom, we had coronavirus.
Oof.
Can you imagine that?
Oof. Cold.
So
It almost seems like an economic war was launched.
Yeah, it's
And everyone failed it.
Right?
Yeah.
You have a slowing GDP. People are already complaining that it's going to be a recession.
Right.
And then boom, you had COVID. So you reduce the interest rate and that boosts the economy up because now there's free money in the market. And then the economy starts boosting itself up by itself. But then what happens when you have too much money in the markets, right?
Well, you're
Inflation
devaluating. Yeah, there's a lot of devaluation going on at that
Of the
point.
dollar.
The dollar is losing its
Killing
value.
it.
right? And then you have inflation, right, right next to it as well. I mean, I think what happened, and I keep saying this, man, and I think anyone who really understands what happened when COVID happened and the amount of money printing that happened. I think there is going to be long felt consequences for that. Nobody knows what happens when you print that much money, but we're all going to find out now. Okay?
Oh, no. We know. We know something similar. We printed money in 2008 during the financial crisis.
Yes, but not on this level. And I agree with you. I agree with you that we know what happens. Yes, the value is devalued and things like that. Yeah. This is why I think one of those one of those times when the Fed tried to increase the interest rates, the market suddenly started crashing. This is because the main issues that happened in 2008 have not really been resolved, right? Exactly. We just painted over it with a bunch of money, right? And expect this to fix itself. Now, when you look at is it the M1 money chart, right?
Yeah.
It's literally like a vertical line going up.
Upward, yeah.
What sort of tightening does it take to reel in that kind of money? You understand?
Something like the 70s where they just blast interest rate up like crazy.
Right, but that cannot be done, because if you do that, then you crash everything. You see, there is a balance. We're sitting at a point where this balance is difficult to sort out. And I don't even think that this is a balance that governments should be trying to figure out. Austrian economics for the win. But you know what I mean? This is what Bitcoin is built on. Okay? But anyway, we can make a whole video about that one, but we'll come back to that. Generally, we know that when we have situations like this, economic uncertainty, devaluation of the dollar, right?
The dollar, yeah.
People tend to move their money into assets that can give them decent returns, right? A hedge, if you will. Go ahead.
You said money. I wanted to call it valuables, or their assets, or their energy.
Well, let's say financial allocations, okay, are redistributed into alternative assets like U.S. corn, gold, natural gas, and U.S. wheat. As we can see the trend, these have all been picking up. We know that generally a lot of people also use this to protect themselves from a recession, which is something that we know is probably coming up soon, right? But the issue that I have here is that I don't think that these things are any longer sufficient to really protect your wealth. Yes, it's going to slow down the loss of wealth that you're experiencing, but with 8% inflation, right, it would seem that one needs to find an asset that is capable of at least matching or beating inflation, and there is only one that has done that. Go ahead.
I would like to add to that, and this is what the audience need to know about this. Inflation is the value of the dollar going down. So if you're investing in assets, those assets have to be higher than inflation. Otherwise, your dollar is going down. This is exactly what we'll do in this video. Yeah.
So pretty much whatever you had last year is now minus 8%, right? And you need to increase 8% to be
zero
at break even, right? Before you're talking about, beating inflation and making a massive profit, right? Now, the next chart which we have here, what we're looking for is correlations, right?
So there's this conversation that you probably see in the media all the time that, put your money in US 10-year treasury bonds, there are other charts or conversations about, Bitcoin is kind of correlating with the S&P or NASDAQ or something like that.
Right.
So we just, let's go ahead and put the data up here, right? But one thing that we also did here was we also added the interest rates, which is the blue line. The increases of Fed interest rates, along with the 10-year interest rate bonds, along with SPY, and along with Bitcoin. So when you look at the first green, right, that was when Fed started increasing interest rates. Notice that the 10-year bond went down. SPY went down. Bitcoin was just chilling. Nobody knew about Bitcoin at that time.
Yeah,
some
Bitcoin
people didn't know. Folks that got it at
2016.
25 cents,
Yeah.
50 cents. Do they still have it? Probably not. But again, 2015, 2017, we started seeing some increase in interest rates again. What happened to the 10-year bond? Boom, down. Right? So folks that are going to buy I bonds right now, if interest rates are going up, what are the chances that those bonds are going to start going back down again? You need to ask yourself those questions. But guess what? SPY went up and Bitcoin went up during those interest rate hikes. But then Yellen comes in, or is it Powell came in? Oh no, actually go back on the slide. So Powell came in and said, okay, you know what, let's chill this down a little bit. Let's start, GDP is slowing down. Let's go ahead and start reducing interest rates. And boom, interest rates started going down. 10-year bond, again, still going down. S&P is going up. Bitcoin is going up. Right? So now the question now is this. 2020, COVID, everything happens. Interest rate got dropped. Everything blew up. Everything went up. But now we're at the point where everything is super confused. We don't know what the hell is going to happen. And that's what we're trying to figure out.
This is why I say that I know that there are economists out there who have gone to Harvard and all these other really smart places. Okay? I know that you've written your thesis on all sorts of things that are probably being blown away by Bitcoin right now. However, this is the thing. From someone on a basic level, okay? Street guy, Abi. I'm looking at the chart right now, okay? And look, here's the thing. I think we need to be patient. There is a lot of, my whole point here is that there's a lot of speculation as to what Bitcoin is trying to do.
Yeah.
But we have not ever known what Bitcoin does. We only see what Bitcoin has done so far, right?
In the past, yeah.
And I think people just need to let it ride, man. Experience it, okay? Because we've heard it all. Like I've heard of times when people say that the Bitcoin is correlated to the US 10-year Treasury bond, okay? But you cannot just pick a period of time and start correlating something to another asset because they move in that same way, right?
At that moment in time, yeah.
Exactly, and we can see that happening across the board. So, for one, because I would ask, in 2016, when the Fed hiked the rates there, and saw the S&P react to that, I sort of expected, but Bitcoin did not react to that. So there is no data there. Then we move forward, and we see Bitcoin rising. So was the S&P, and the Fed rates were rising as well. I think when you are trying to taper, right, it would make sense that people would put their money into other things to protect themselves, right, from the Feds and things like that. Now, when we start pulling back, right, because when you're tapering, you're trying to pull money out of the economy. This means that there's a lot of money in the economy. But when there's a lot of money in the economy, people tend to throw it back into the market, right? We saw that is why we have this point in time here with
corporations
COVID.
were doing buybacks.
Exactly. So, and this is why we see this massive rise. So I do not see how, if the rates should be hiked from here, this would mean that Bitcoin is going to be pulling back. As a matter of fact, I think people will be looking for even more places to protect their assets, which is why we showed you the chart there with the corn and everything else like that, right? Exactly. These are gold. These are your typical hedges. And I just think that Bitcoin is now in the game, and it's unlike anything that anyone has seen. So I don't think that people can necessarily say that they know what is going to happen here. Furthermore, I would say if we are trying to taper, we cannot be printing more money. Does that make sense?
Especially right? if we're printing more money for war, and we've known what happened in the past when the economy is in trouble and we're in war.
Well, here's the thing. We do know that if your economy is able to fund a bunch of wars, or if weapons are your main, what would you say? I guess your main domestic product, if you will. America sells weapons to everyone, don't they?
We do.
So if there's a war popping up somewhere and you can make some money from it, do you stop the war or do you make some money from it first?
Let's go and tell the World Economic Forum that.
It's something to think about. As we see, the US has approved a $13.6 billion for Ukraine spending bill. I think there's a lot going on in America right now that could use $13.6 billion.
Did they pass an energy bill?
Dude, there's a lot. We can start at a very basic level. Okay, when we come to infrastructure, okay, which America is desperately in need for infrastructure, of course. Healthcare. I don't think anybody's student loan is gonna get forgiven. I'm sorry, but
Some people.
If you're still listening, forgive it, I guess, I mean, hey,
Good for you.
good for you. That's all I can say. I don't want to say anything else. But, I think that you cannot be doing this type of stuff because I think you should probably prioritize the economy at home first.
Yeah,
right?
Yeah,
before going out there. And mind you, man, Ukraine is not even in the, what do you call the thing?
List of allies in the world Euro Union,
European Union.
Yeah,
in the European Union.
EU.
Jeez, man, we totally
it's blind. It's okay.
It's okay.
You got this.
Christ.
It's in the brain.
Jesus, help us. Well, look, inflation clearly, as Double O you mentioned earlier.
Yeah.
Right. Inflation is at an all-time high, or at least one of the highest points we've seen in almost 40 years. It is.
Yeah. In recent years.
And these other assets that are supposed to be hedges, right? Gold, or the S&P, which is supposed to just be performing steadily over time. What is the average return on the S&P? Was like 5% a year?
It's 8 or so.
About 8 or so percent.
It's showing 33% here in this case.
Yeah.
At this point.
Hey, look.
This year,
look
though,
at the Bitcoin.
S&P is getting this butt whooped.
I mean, look at the Bitcoin chart there, and it's. I mean, it speaks for itself, right?
Yeah.
There are some things that, you just can't argue against. I don't see a correlation yet. Maybe someone else can point it out. Maybe if you guys in the comments, if you understand what it is about, where these correlations come from, right? Let us know. But for me, I think that not having Bitcoin is it's risky.
You know what's funny?
Let's put it that way. It's risky not to have Bitcoin.
Very risky because actually the multi-billionaires are starting to hold Bitcoin. The big funds are starting to hold Bitcoin because they've looked at their
Fidelity
numbers.
is introducing Bitcoins to
the 401k.
To the 401k, right?
Yeah.
So, dude, back in the day, okay, I used to enjoy kind of going back and forth with people on the internet who were like, hey, Bitcoin does not have a use case, and I'll try to prove it to them. At this point, I don't give a shit, man. If you want to buy it, cool. If you don't want to buy it, man, how did that saying? Have fun staying broke. Yeah, that goes to Warren Buffett as well. Have fun staying broke.
Of all people, that's just the broke.
Hey, listen, Double O, what is Bitcoin, man? Tell us.
I would just say it's resilient against everything.
Yes.
Yeah, it's the energy that just keeps you going.
As what does Fidelity Investment say? Fidelity Investment says Bitcoin is a superior asset. Essentially, is what they called it. Oh wait, hang on, wrong screen there. Bitcoin is a superior asset, as Fidelity would call it. But what do I know? I don't think that the rate hikes that are coming up are going to affect Bitcoin too much. I think we're going to see a pullback. I mean, we also did some technical analysis, and really, I would really attribute what we're seeing right now more so to just our technical analysis versus Bitcoin reacting to something crazy, because it will be interesting, shocking, perplexing to me if we're able to do technical analysis and it happens to line up with news that supports that movement every single time. China, where was the other up move? There was an up move somewhere which we also we predicted that and we got it. Okay, and then we also have this pullback which we predicted. I think the move might be exaggerated somewhat by the fact that people believe in the information that they see before their face right now, right? But I do not think that Bitcoin is correlated to gold, the S&P, the 10-year treasury yield, or whatever else people will come with in the future. Yes, yeah. Because it is borderless. And so are you accounting for other markets that are not, because Bitcoin is not attached to any one market?
Nope.
Go ahead.
It's not. Yeah, I would like to add to that just by saying that, Bitcoin is it's new and it's different. Yeah. So the variables could cause some people to say, there's that quick reaction from traders. Because, when I have more institutional investors investing, and they might want to move their money into something else that gives them a faster opportunity. So you might see, just like the chart is showing us, that there's a possible dip coming up.
Right.
That could be institutional investors moving their money out of Bitcoin to quickly invest in commodities like wheat and all this other stuff that is going to give them a quick gain. And then once that bounce goes off, which we know is going to go away, once it start going away, they break back into Bitcoin and boom, up we go.
Look, personally, I'm sticking with the technical analysis, man. Yep. We've seen it. We know what is coming. Okay, there is the pullback. There's a spring. Okay, and then we are off to space. Is all I got to say. And I'm patiently waiting for that moment when we will get to just, I don't know. I don't want to say I told you so to anyone, but I guess we'll patiently wait on that moment where we get to just revisit this day and just tell people like, hey, I guess Bitcoin is correlated to anything, right? Any final thoughts, man?
Hey, I think this has been really great. This one topic has been wonderful. Look out for the next one. I really enjoyed this one specifically because it got us talking about microeconomics and macroeconomics, and how Bitcoin impacts all of that. So it's been
macroeconomics is a beautiful thing. As a matter of fact, we can do something talking about some Austrian economics. That's my jam.
Yeah, I think that's a good topic.
Hey, listen. I mean, these are the principles of Bitcoin. This is what Bitcoin was built on. Yeah. You know? Yeah. Anyway, let's stop rambling, bro. Until next time, ladies and gentlemen, brazen out.
Double O.